This is your LMAX exchange technical update for Friday, October 6, 2017. Euro-dollar. So the euro remains under pressure and the market continues to look towards that measured move extension off the head and shoulders top that was triggered several days back below 118.25, targeting 115.55 below. The market also coincides down in the 115s with the 100-day moving average, and so a drop down to the 115s is making sense as the euro continues to look to trade lower. Only back above 119 would compromise the current bearish outlook for the euro. Sterling dollar. Cable has dropped back quite significantly from its recent 2017 high in the 136s, and there's now scope for additional declines back towards the psychological barrier at 130. However, overall, the medium to longer term outlook is highly constructive now following a bullish breakout that we've seen earlier this year above 127.75, suggesting the market is putting in a longer term base off that plus 30-year low from October of 2016 down in the 118s. Look for a higher low, therefore, somewhere in the 130 area ahead of the next major upside extension back above those highs in the 136s and through 140 further up. Dollar yen. Dollar yen has been consolidating over the past several sessions, and the market now is trying to figure out which way it wants to break. Overall, we've seen a range trade here over much of 2017, and so if we do see the market push higher, gains should be well capped in the 114s ahead of what could be a resumption of declines all the way back down towards that recent 2017 low in the 107s. Euro Swiss. Euro Swiss has been trading sideways over the past several weeks, though ultimately the breakout that was seen in 2017 above 110 and then 112 does put the pressure here on the top side, suggesting we could see fresh upside and a continuation of this now newly formed uptrend through the recent 2017 high at 116.24 and towards that major psychological barrier at 120 further up. Aussie dollar. So Aussie has come under pressure over the past several days, and gains that were seen to plus 2-year highs above 80 and 81 are now fading, and the market could be at risk for rolling over for a more significant decline. A close below 78 would suggest that we could then see an acceleration back down towards next key support in the 75s. Dollar CAD. Dollar CAD continues to accelerate after seeing a record plus 2-year low down around 120.60, and the market is into this correction now that looking like it wants to extend up towards next key resistance at 127.80. That's the high going back to August of 2017. Any setbacks now should be very well supported as this major correction continues to play out in dollar CAD. Kiwi dollar. So the New Zealand dollar is now broken back below that key support around 71.30 from back on the 31st of August, which sets up the possibility now for a lower top and fresh downside extension towards the 2017 low all the way down at 68.18. SPX 500. The S&P 500 has pushed up to another record high, this time the market trading up through 25.50, and it looks like this record run is not going to stall out unless we see at a minimum a breakdown below 24.87. That's some recent support, and a break back below that level would only take the immediate pressure off the top side. Until then, the market could continue to extend. However, daily studies are looking stretched again, and medium to longer term studies are very stretched, with this market running to record highs over the past several weeks, and for this record run continuing basically since 2013. So there is this possibility that the run is exhausted given the longer term charts, but again, we would need to see a breakdown below 24.87 at a minimum to take the immediate pressure here off the top side. Gold. So gold has seen some setbacks over the past several weeks, but this is a market over the past several months that has been very well supported on dips and has seen some intense setbacks, but each time finding some higher lows ahead of a continuation of gains, most recently to fresh 2017 highs up around 13.57. And so this latest round of setbacks could once again be very well supported around the 12.50 area or maybe ahead in favor of that next major upside extension through the 2017 high and towards the 13.75 2016 peak further up. Only back below 1200 here would compromise this constructive outlook.